Can we take a step back?
Take a step back. Let's do it.
Tell us who you are.
Yep.
Introduction to Ryan.
Mm-hmm.
And where are you working these days?
Yeah, absolutely. Ryan Liebowitz. I'm with Cross Country Mortgage now. Previously, I'd been in banking, finance for, golly, since about 2004. And then I've been in the mortgage industry for about the last 4 years. And like I said, we're with a company called Cross Country Mortgage, and largest retail mortgage in the country. And one of the biggest things that we're able to offer is our non-QM kind of plethora of products.
Which means non-qualifying?
Non-qualified mortgages, that's right.
Who is the target for the non-QM?
It is expanded to where there's a lot of people that could fit non-QM. But I think if you were to say, hey, Ryan, give me the group, I would probably say entrepreneurs and retirees, because entrepreneurs.
You're working for a 1099, or you're not a W-2.
You're not a W-2.
And maybe you own a business. Maybe you just started a business.
Yeah, and your tax returns haven't caught up with your income, right? You're going to tell me, hey, listen, I'm making $150,000 a year, but you're having expenses. You bought a building. You're having to, buy inventory. You're having to hire more people. You make $150,000, but you only show 10. Right. Well, I can't just trust that you do
because if you go through the Fannie Mae Freddie route, you're like, which you guys have that. You have that also.
Oh, yeah.
But today we're talking about some non-QM mortgages, because not all the big companies want to lend to you. Mm-hmm. I mean, I'm in that boat myself as a real estate agent, so it's great for real estate agents.
And I think times are changing. I mean, when I think about entrepreneurs, let's say you do. Let's say that your company does $500,000 a year, right? But your expenses are $420,000. You've got other stuff. So when I look at your tax returns to get you a house and it shows $23,558 in income, you're like, that's not really what I make, right?
Exactly.
I'm able to do these things. I don't want to pay any more taxes than I need to. Okay. Well, so for that same $500,000 company, you're the 100% owner. But we get your bank statements for the last 24 months, and it shows $40,000 in deposits. We're able to use the deposits, and we're able to take 50% of them. Now you go from showing $1,800 in income. Now you show $20,000 in income, right? Mm-hmm. Because that's what the deposits show. So when we're looking at business bank statements or just bank statement loans, that's what we're looking at.
But isn't the interest rate going to be like a whole lot higher?
Nope, it's not. Yeah, I mean, so that's the good thing about housing or non-QMs in-house is that they're not. Now, it's possible if you broker it out, you may be looking at some. It's about 2.5%, maybe even 3% over just traditional pricing, but we're not that way.
So is this the same as back in the old days, like where if you had bad credit, you would also try this?
No.
And it wasn't.
You have to have good credit.
You still have to have good credit.
Yeah, I mean, these are going to have better credit than like an FHA.
Right.
Qualifier, because they would be looked at as more risky.
Okay.
Right.
So it's more of like credit and bank statement based.
Mm-hmm. Yeah, credit is important.
Yeah.
Right.
You still show tax returns?
Nope.
No, don't even have to worry about tax returns.
Not in those.
Right. But you can. It is to buy your own personal residence
or an investment property or
investment
secondary or whatever.
Right. Okay.
Mm-hmm. Yep.
Man, so this is a big deal.
So if you're watching the video and you're like, why is Ryan not even moving his hand? It's because I don't want to make weird noises on the microphone. Cool hand. I dig that. Man.
Which makes sense. We need to have one of the bendy arms. So if you want to support our team and see more great content, sponsor us so we can get a boom arm thing. What is that called? Mic stand arm that we could just put on the table.
We're going big.
Anyway.
We're going big.
Sorry for all that extra noise, if you even heard it. Comment below if you heard weird noises while we just talked. Anyway.
So speaking of the business banks, we also have a 1099 program to where similar route. Let's say you're a truck driver. You're bringing $150,000 a year. Once again, you're going to write everything off. Like, why wouldn't you? It makes sense. We're able to take that W-2. We reduce it by a 10%.
You mean 1099? You just
I mean, 1099,
Okay.
sorry. We're able to take that 1099 income, reduce it by 10% as an expense factor. We're able to use that as your income.
Wow.
No tax returns. It's just
Is there
1099 loan.
like me, I have an S corp. So is that kind of the determining factor? Some agents, some 1099 people, they're not even set up as an S corp. So do they have to choose one type of loan over the other?
Well, not every business owner is going to like 1099 themselves.
Oh, right. Okay.
You're just going to draw the income from whatever's left,
Yeah.
right? Or
Right.
maybe you pay yourself through portions of a W-2, but they're kind of two different situations,
Gotcha. Okay.
if you will. And then something I'm doing right now that is a really neat product, especially for those people that, let's say they've made a good bit of money, they're just not working that much right now because maybe they don't have to. Right? They've got $2 or $3 million in the bank, and they're drawing $2,000 driving a bus. I don't even know what you get paid driving a bus. But let's say you just drive a bus.
Right.
Well, we're able to say, okay, you want to buy an $800,000 house. If you have 125% of that loan amount in available like investments, and we don't take them. We don't put a lien on the investments. We don't take the investments. But if you've got $1.2 million in an investment account, well, you could qualify for an asset qualifier loan, and it's not an income. It's based on your assets that you've got available. Like cash, you get 100%. Stocks and or stocks, you can get 80%. Bond, there's going to be different classes,
Okay.
right?
Yeah.
But that's really helping this client because they sold a company and they're not having to work. And they bring in, a small amount of money, but like that shouldn't stop you from being able to buy an investment property or move.
There's definitely some smart routes.
Mm-hmm. And there is
one of the best routes I've heard.
They're routes.
Yeah.
Like just know, like there are routes. There's so many different options that people don't even know about. And my goal this year is to find a way to get every realtor I work with to close one more deal through something that they didn't even know was out there. Right.
So basically, like, you have somebody who tells you they make a lot of money, and then you're working with, mortgage banker X, mortgage broker X, and they're like, you said you made a lot of money, but the guy's tax return says $44,000.
Yep.
How is he even going to buy a $400,000 investment property? Oh, we do the non-QM route with cross country.
Yeah, absolutely. I mean, it's just I think there's varying ways to look at every deal that we come across, and we've got to, with COVID, with people have a lot more debt now.
Right.
I mean, the credit card debt over the last 3 years has exploded. Right. So if you're making $90,000 and you've got credit card debt and it's gotten a little bit out of hand, but because prices are high, and then you're trying to buy a $400,000 home because that's just what the value of homes are.
Right.
God, and you started a business and you're making money, but your tax returns hadn't quite caught up with your income. What do? You got to wait another year, 2 years, and rates are higher, or not rates are higher, values are higher at that point.
Yeah.
If you've got land, you can put in manufactured homes. So I think it's just a matter of you bump your head up against a wall enough, you're like, we got to start figuring out ways to get these things done.
We can find some land and go ahead and put the septic and power and get the mobile home on site so that we then sell the mobile home as a package. And it's $230,000, $250,000, $280,000 for a completely brand new home.
Right. And the dealer is called New Frontier Homes. He's also got a place down around Macon, guy by the name of Adam Larson. Good guys. If you're going to get manufactured homes, check out New Frontier Homes. So that I think that is going to be something that becomes pretty normal for people that have cash to be able to do that. We're not going to finance like a spec manufactured home construction. We're not going to do that.
Gotcha.
But if you're, if you are the person that wants to buy a manufactured home and buy land, we've got a land home package.
Oh, that's
5% down.
All right.
And the rates, we closed 2 in December, one time close, both rates on the back end, the fixed is like, it was one was at 7.25, one was at 7.5.
All right.
It's pretty nice, right?
When does a buyer have to pay money for that?
they're not going to have to pay anything because they already had the land. So we were able to wrap all costs. We were able to wrap all the interest that would be paid during the construction phase into the loan itself. So they're not going to have to pay anything until they get their first mortgage statement when the house is done and they're moved in. That will be the first money that changes hands on either of those deals. And one equity came back at like 40% of the value, and the other one, and I think it was like $90,000 to $100,000 in equity like day one.
Right away, yeah.
The other one was like 60.
Yeah.
So they're just good investments.
Oh, for sure. I just sold a mobile home in Nicholson for $230,000, a 1995 maybe.
Okay.
It was big, over 2,000 square feet, but like 200 feet down the road was a brand new one for $280,000.
They're nice. Like
Yeah.
they're just not what you think. Like if you had
Right.
thought about a mobile home in years and you're like, yeah, I'd see them. There's no way I'd live. Manufactured homes are not. That's not what this is.
Right. But that's like, is that a non-QM product?
That's
or is that
it's
just
just a construction product.
Yeah. Okay.
Yeah.
I don't even know if you were supposed to talk about that, but thanks for letting us know.
Absolutely.
I don't know if anybody even cares or even knows that you're at Cross Country Mortgage now versus another company, but this seems to be a thing. This is, I don't even know if you knew I was going to ask you this question.
I don't even know the question.
But what's, in your opinion, why do loan officers, mortgage guys, kind of switch from one company to another after short times, you know?
It can be product based, right? But it can also be kind of growth. Like how much is that company wanting to grow your area, right? I think it's like anything. I mean, once you've been doing something, why do realtors become brokers, right? Because they probably make more money, right? That's one thing, but they've also got people that they're mentoring and people they want to bring into the business. And well, if I can help you and you can work under me, that's what I want to do. Or how are rates done, right? Because some people have higher rates and some people have higher comps.
Oh, yeah.
Some people have lower comps, but it's usually lower rates, so they get more deals done. There's a lot of different reasons that people leave companies. And it does happen. It does happen a good amount.
But it shouldn't cast any doubt on a potential borrower.
No, because once you do your loan, it's not like that's going to impact your loan.
No.
It's just more personally, hey, that's a better opportunity for me as a mortgage lender.
Yeah.
You know, whatever all that. But there's been a lot of movement over the last 4 months here in this area. There's been a lot of movement.
People jumping from one place to another.
Mm-hmm. Yep.
It happens.
That's right.
But, yeah, that's the life of the business. Real estate agents do the same thing.
Yeah. I want to ask you this question. It's something that I heard somebody talking about, and I think it's great to, like, remind people, why do I need a realtor? Like, if thinking 21 and 20 and 22, people are like, well, I moved, but I found the house and it was gone. And like, what did my realtor didn't even do anything? Didn't open houses, like they're just making money.
Right.
And then last year it was the settlement. Well, golly, they're making so much money, blah, blah, blah. And everybody thinks, like, why do you deserve 3%? Well, there's a lot of work that goes into it. So I think it'd be good just to be like, here's what I do. Here's what a realtor does.
And like just recently, for example, everybody who got off work because of these ice storms, a huge majority of them got to stay home and they didn't have to do work.
Right.
Whereas, like, I have to do work that whole time. You know, I came to work yesterday. I had to get out of my house because I also have 5 kids. But even if I didn't have 5 kids, the work's not going to stop, whether it's 10 p.m. or Saturday at 10 p.m.
Yeah.
You know, Sunday at 4 a.m.
So what is it? Like,
so
what is that work? What are you doing?
Now, of course, there's a work-life balance that any real estate agent needs to focus on. But there's a whole lot more that happens outside of, you know, and all the time, buyers will find their own house. Mm-hmm. But that doesn't mean their real estate agent is not providing value. There is so much stuff that happens after you write up an offer and go under contract. And if you're working with an agent where there isn't that much that happens, then maybe they didn't give you great service. And so, whether it's like talking with loan officers at after hours during normal business, talking with lenders, talking with attorneys, making sure the process is moving forward with making sure, did they actually pull title? Is it back yet? Are they going to be able to close on time? Making sure the appraiser got in. If there's an appraisal, it's not like this is work where I'm climbing a pole and putting new power lines in and there's labor involved.
Sure.
But there is work that always happens that is no agent hardly ever documents this because it's like we're getting paid on a percentage of the price of the property, similar to mortgage lenders. You're getting paid on a percentage of the loan.
Right.
And so none of us have ever had to quantify how much work do they do on this deal versus this deal. But I guarantee you, it is a lot of work. And quite often, some of the lower price deals end up being the most work.
It's true.
And, and then there's the part where, now, if you are an amazing client and you don't need much hand-holding and you got all the time to negotiate and you're sure that you're getting the best deal, great. Don't use an agent. Maybe you're the small percentage where you're not going to get a better deal. But there's no way you ever truly know whether or not you could get a better deal when it's just you as a home buyer or home seller.
I think the
doing
home
it on your
selling
own.
process would be so difficult. There's so much that goes into that.
And if you're, so if you have a job,
right,
and you're also trying to sell a house or buy a house, you need help.
Yeah. I don't have contacts either, right? I think that's the other thing. It's all right, a listing agent with I'm going to say the term Rolodex. People probably don't even know what the Rolodex is anymore. But now you've got 1,000 people you can call at this house.
Right.
Right. I don't have that many friends, right? Now,
right.
I may put it online. I may do that, but that's not getting to the people that a realtor is going to be able to get to.
Right. Exactly. Yeah. And the truth is, a huge majority of properties that are listed by an agent, a different agent brings the buyer. And that is a good thing because in Georgia, you can't have dual agency, which means I represent the buyer and the seller. How can you logically do that? If I know everything about you as a home seller and I know your best price you're willing to take and I know all the situations about your house. Of course, I'm great to sell your house. But then if I have another buyer who comes along and I'm representing them and we're out looking at whatever houses, and then all of a sudden now you want to buy a house I listed, how am I going to truly represent both sides properly?
So you can't
can't actually do that. It would one of them has to be a customer. So it has to go.
So like an open house. Somebody walks in, they're
so
like,
if I'm listing your
house.
if I'm listing your house and I hold an open house for you.
Yeah.
And then a buyer shows up and they're unrepresented. They don't have a realtor agent on their side. They're just going to be my customer and I have no fiduciary obligation. I have an ethical obligation to them as a human and as a realtor. But then also I don't owe them fiduciary. So if they tell me, we're pre-qualified for $450,000, but we only want to spend $400, or we only want to offer $400. Tell them we want to offer $400, even though the house is $450.
Gotcha.
Then now it's like, well, I know you can pay $450, and you just told me that, and whereas my fiduciary obligation is to the seller.
Okay.
So I'm obligated to try to get you the best deal, because I'm the professional as the realtor, and you're the one selling the house. So I've got to do my duty to get you the best deal. And I have to qualify on the other side, even if there's a buyer's agent, I still have to make sure, is this a qualified buyer coming over here?
Right.
Do they have a letter saying they talked to a lender? If they don't, that doesn't mean they can't make an offer. But of course, I want them. I don't want to waste anybody's time.
Right.
You know?
Especially theirs. They get all excited and then they can't afford it. Like that would be just
right.
It's an exciting purchase.
Exactly. And then there's so much stuff that happens like with setting expectations of each step that goes along. Mm-hmm. And I look back and, 12, 14 years ago when I got licensed and started selling a lot of houses, and a lot of them were ugly foreclosures, like I did not know how to advise people as good as I do now. Mm-hmm. Having this many more years of experience, like, hey, here's what you might see on a inspection. Mm-hmm. Here's what you got to worry about on that inspection. You're selling a house, okay? Grandma died, now you inherited this house. You got to sell it quick. You need money quick, but you didn't even do probate. Can I even sell the house? Like, well, now I can advise you. Here's the best process to do that,
Experience is nice.
Right. And I've definitely noticed in our area, we still have nearly 1,400 realtors, part of just the Athens Area Association. And so anyway, the area we're in has a lot of new realtors.
Yeah.
And I bet in the last 3 years, I've worked with almost all young agents.
Okay.
That brought buyers to sell my listings. A lot of them were really good, and some of them I could tell 100% they had never even typed up an offer, because I would actually have to like redo the offer and be like, all right, this is where we type this in. And it's part of the process. And I'm not going to be like, screw that buyer. They can't buy this house.
For sure.
I'm still going to try to make the deal work.
Yeah.
But anyway, we're in a fun spot now as real estate agents. If buyers and sellers come along and say, hey, what about this lawsuit? I don't have to pay agents anymore, right? It's like, well, yeah, you don't have to pay an agent if you don't want to sell your house and hire an agent. You don't have to. But if you want to hire somebody, you're going to have to pay the agent.
Right. That's so funny. Yeah. So what are like three things if I'm going to buy a house and I don't have a realtor friend, a person that I'm using, what are three questions that are really important that they ask as they interview people or they ask friends? Because I think sometimes the same in our field, hey, go use this person, but maybe that person's brand new. And so they're like you're saying, and I'm not saying don't use a brand new person. I'm just saying like here's some questions that you just want to make sure on the front end as a buyer when you're interviewing agents.
For sure. And experience is incredibly important. So like asking that person, how long have you been in the business? How many houses do you sell a year, or how many have you sold, like on the buyer side versus the listing side? Mm-hmm. That's important questions. And if you are brand new, well, like who is behind you to help advise you if we're even doing the right thing?
Right.
Because if it doesn't matter whether you're a first time buyer, second or third, you could be 50 to 75 years old buying your second, third or fourth house, but you've only done that 2, 3 or 4 times.
Right. It's not
so how much experience do you really have?
For sure.
Because so much has changed over the years. And so important to ask, what is your experience?
Experience?
And if you don't have the years of experience, well, do you have an experienced broker, transaction coordinator, assistant, somebody working alongside you, like if something crazy comes up, to give us advice on what should we do next?
Which will probably happen, right? Something's going to come up.
If you're going to, it doesn't matter whether you're buying a brand new house or an old house.
So true.
And of course, well, then there's a whole lot more to go in. So experience. Experience.
What's another?
A couple other things are, have you ever invested? Like,
okay.
Do you even own a house as a real estate agent? there's a lot of agents right now. They've never even bought a house themselves. Doesn't mean they're bad, but it goes back to, I was in the business for 5 or 6 years. I probably had sold over 100 houses before I even bought one myself.
Okay.
So by the time I bought a house, I was very experienced.
Yeah.
I
Knew what
hired
questions
me.
to ask.
I hired me. I'd sold 100
Probably a
houses.
good idea.
But that can be important too.
Okay.
Like, have you ever invested? Do you own a house besides anything? Besides the house you just live in?
Okay.
That's not that important, but I would say that that's up there with some of the top 5 questions you need to ask an agent.
Okay. Okay.
Actually, I have a list. I'm going to pull that out. We're going to edit this part out.
All right.
Did you send me a copy of those pictures? This was a post I made recently. Oh, I have it on LinkedIn. Yeah, the Instagram. Where did you post that on Instagram?
It should be on your personal.
Oh, great.
So he posts your stuff too?
I put 15
awesome.
15 questions you should ask to,
Nice.
to figure out if you're a prospective broker, a real estate agent you want to work with.
That's cool.
Boom. Oh yeah, here we go. The newsletter. What is your experience? So this would be
the newsletter you said.
yeah, that
okay.
newsletter. Yeah,
I like it.
Yes. Hey Alec, are we still recording? We probably are.
Yeah.
So, do you specialize any certain type of real estate?
Okay.
So that's real important because if you're getting hooked up with an agent who's like mainly does commercial, they might be amazing. They don't know anything about residential, but they're your uncle, brother, cousin, best friend, and they're willing to help you. But should they help you? If they specialize in industrial real estate, but you wouldn't need to buy a house.
Yeah.
Like don't, or vice versa. You have a close person to you that does sell residential and has only sold residential. Should you use them to help you go buy a restaurant building?
It's fair.
And it happens. A lot of agents cross over.
Sure.
I'm one of those people.
That makes sense.
Yeah.
And I guess the whole point of that, even asking the original question, realtors create so much value for our communities. They understand what the values of houses are within those communities. If you're trying to price it too high, if you're trying to price it too low, because if you have somebody in your neighborhood that sells a house $50,000 below what all the other houses are selling for, you are kind of screwing your neighbors, right?
Or vice versa.
Or
you're trying to sell it for $50,000 more than everybody else.
Yep.
Can you even get that? It depends on the situation. Very rarely. And somebody might offer it to you. I actually just had that situation where I was trying to set a new bar. My client wanted to sell it for really high. Mm-hmm. It was a nice remodel.
Okay.
Then we had a buyer that came in, and my advice was, I think we're going to sell it for around $410 to $415, based on all the comps.
Okay.
The comparable sales. And what is this remodeled house going to sell for? Well, every house is different. Every square footage different. Everybody's yard is different. So we're always guessing as a real estate agent. But we use comps. The appraiser uses comps. And so then we get a contract nearly the asking price, which was $35,000 higher than I expected to sell for.
Oh, wow.
But then the appraisal was $420,000. So we had to drop it down. $25,000. So, but hey, it all worked out because initially my seller was going to pay $10,000 in closing costs.
Okay.
So we were getting very close to the price of the listing price. But then he was really paying $10,000 in closing costs for the buyer, plus paying the commissions. And so his net was a lot less than the asking price. Well, then when the appraiser came and reduced it and said, it's only worth this, well, then I helped him negotiate. I was like, well, you don't really have to still pay the closing cost.
Right.
And so he didn't.
Right.
To make the deal work. If the buyer needed it, maybe he would have. But we threw it out there first. Just because the price on the appraisal came way down low doesn't mean the seller has to also suffer and pay the closing costs and also.
Yeah. And
He went paid zero closing costs.
And speaking to that,
Hopefully that made sense.
If you like the benefit for the buyer in getting seller costs instead of reducing the amount by $10,000 can be pretty significant to your bottom line. So think about that as if you're buying a house and you are talking about asking for a reduced amount versus closing costs and buy downs and things of that nature. That's probably where you want to like include your lender in the discussion.
Oh yeah, for sure.
Because reducing $10,000 on a $450,000 house, it may only change your, payments by $25. Let's say $30.
Yeah.
But if you took that money and you bought it down or you used it for a short-term buy down, your savings can be significant more than what that just $10,000 reduction in price is going to be. So I think that's one of the things I love to do is work with realtors and their clients together on, hey, here's where we can make these things work.
Right. Hey, let's jump back. That reminds me. Can you buy down the rate on these non-QM loans?
You can. Mm-hmm.
Nice.
Yep.
So do you even care about talking about where those rates are right now?
I mean, rates are
like if you're doing a conventional versus non-QM.
Most rates are going to be like in the 7s right now.
So here we are, January 22nd. Is that right? 23rd.
4th. Yeah.
And so if you buy a conventional loan property, you're putting 10, 20, 30% down. You're going to be in the mid 6s if you have good credit. Or nearly 7.
You could buy down the rate. I mean,
no, but just like
you got the 10-year at 4.7 right now. I mean, if when it comes to mortgage rates and how they're kind of determined from a base standpoint, is going to be your 10-year plus a spread of some sort.
Right.
Right. So 10 years at 4.7, spreads are in the 230 to 240 range.
Wow.
That's 7% just like
for somebody with great credit and a good down payment, they're probably paying 7% today. And
without a buy down at all.
And on a non-QM, how much are they paying without?
Mid-7s, let's say.
Mid-7s, yeah.
Maybe a half point. But sometimes it's not. Sometimes it's kind of on par with it. It just really depends. So it's look at all the options.
Yeah. And I know that a lot of investors who already have, if they're buying a property that's going to be investment with rental, with tenants in there, if their tenants are in place or if they're about to be in place, you got a great DSCR loan?
We do. Yeah, you can.
Which is debt service coverage ratio loan.
Right. So it's all based on the expected rent coming in versus the payment.
And you don't even care at all about my bank statements usually, right?
I don't care about your income. As long as you can bring the money to the table. Like we got to verify that you can put the down payment down.
And it's almost always 20 or 25% down?
Mm-hmm.
Yeah.
Yep. Well, then you're going to look and say, all right, well, Ethan's going to pay $2,000 for this, but either he's got incoming tenants and you're going to make whatever $2,750. Let's say that you want to buy a investment in an area that does a lot of short-term rentals. Well, we can use Air DNA as a place to say, hey, listen, here's what the average rents are going to be in that area.
Okay.
You're going to get an appraisal based on those figures of what that rental looks like, and so the loan is more based on payments versus rents, right? Income versus expenses.
Right. And the ratio needs to be usually at least 1. So if your rent is $2,000, your payment, principal, interest, taxes, and insurance total. If your rent is $2,000, the payment better be $2,000.
Mm-hmm.
Or
for the most part, we can go to 75 basis points.
Holy cow.
That's going to be for really good credit.
Okay.
So the situations are a little bit different as far as what that looks like. But yeah, I would say in general, just you as an investor, you want to be sure that you're making.
I mean, that 1% rule has been a thing for a while.
Right.
And as a benchmark, like if you're looking to invest into a property, and that's very difficult. I mean, if a decent house that someone is going to pay $2,000 a month for, the sale price of the house probably could be $350,000.
Right now.
Although, off-market deal I just found for a client of mine, we found a duplex.
Okay.
$280,000, and each side will probably rent for 13 or 1400, and so boom, right there, nearly 1% rule, just under the 1% rule, but he's putting 20% down, and his mortgage payment was somewhere around $1,800 a month.
And that's a great idea for younger folks that are looking to buy houses, looking to duplexes, looking to try and quadplexes, because, if you can get into one of the units and then you're generating income from the other two or three or whatever, they can be financed. And it may not be the house that you live in forever, but think about moving out. You've already got 3 tenants. Now all you gotta do is rent your property out. You're generating money while you're living there for your first house, and then you leave and you've got a whole freaking,
I had an intern that left Athens after he graduated.
Okay.
Bought a house over by the new Brave Stadium.
Yeah, nice.
And it was around $400,000. The basement was finished, and he added a kitchen. Mm-hmm. So he's renting out the basement for $1,200 or $1,300, and renting out other rooms to his buddies for $600 per room. So it was It's like 4 bedrooms upstairs. Mm-hmm. So 3 times 6, 1,800 plus the 12. He was making $3,000 a month.
It's awesome.
And basically covering 100% of his mortgage and almost all the utilities.
And I bet that value is.
Oh yeah, he bought it
tripled.
In 21.
Oh, never mind. Okay, it's still significantly
but
higher.
It still went up 100,000.
Yeah,
and
awesome.
His interest rate's like 3%. So can we go back in time? Actually,
can we go back in time?
There is an easy way to go back in time, and that's called a subject to mortgage, where certain people, it's kind of like assuming the mortgage, but you don't actually assume it in name. You take it over, and you put the property in a trust, so each side is protected. Mm-hmm. And I've done this numerous times. Normally I did it early on in my career when I was fixing up a house.
Okay.
And then I would sell it. So I would never hold it more than the longest I held one was almost a year.
Okay.
And then now I've got one. So I bought it subject to the existing mortgage. Okay. So all I did was give the first owner a down payment, did repairs on the house, and then I sell it to someone else on seller finance terms. And so I've got the 4% mortgage.
So does the mortgagee even know that this is happening? Does the lender?
Well, for certain they're going to know because I transferred it into a trust. So they don't necessarily know that I'm the one that's the beneficiary of the trust.
Yeah.
So the due on sale clause is never going to be affected because people use trust all the time.
Sure.
It's usually for asset protection or elderly protection or whatever you want to call it.
Right.
And so, and in general, the due on sale clause is so rarely happens. Mm-hmm. Although the person who taught me about trust on his very first sub 2, he's done a couple hundred sub 2s. Only on the first one was it ever called.
That's so
because he didn't do it right. So it's like if you want to go back in time and get these low interest rates, like that's a 4% interest rate that I took over.
Yeah.
And so there's 2 deals right now that I'm working on to try to sell where other investors got them. They need a buyer, and you still got to have a good down payment, but you can get a 3.25 interest rate on a house in Monroe in the best high school area. Another one in Houston, a 1.5-year-old townhome. The guy's like, I got to get out. Can't wait to try to sell it because he just bought a townhome competing with other new construction townhomes. So it's going to be hard for him to get his money back. He's like, well, he's willing to sell it, but he's got a 4.25 because it was whatever the big home builder gave him a huge discount.
So this is why you need to follow Ethan and attend the Athens REIA events, right?
Yeah, Athens Real Estate Investor Meetup Tuesday, January 28th, 6 p.m. Chad Brown will be there.
There's so much. There's just, man, every time I'm around you guys, like there is a lot of stuff that y'all know that I didn't even know was out there, right?
Right.
So these, these are super helpful.
Yeah.
Type events. So check that out. Definitely check that out.
And people who come to these events, like whether they're super experienced or not, like so many deals have happened because people showed up to this meeting that I do once a month. And with rookie people, super experienced, property managers, contractors, lawyers, whatever. Anybody we actually do need more contractors to come because that's one of the things that I have that is a benefit to any person that works with me. I've got connections with every single tradesperson there is, whether it's roofer, plumber, whatever, but not enough come to my investor meetup. So
Come to the investor meetup.
come to the investor meetup.
Sorry, I got to grab
Yeah.
a little bit of water.
Ryan, Cross Country Mortgage,
Yep.
how do people find you?
Yep, you can follow me on Instagram. It's Ryan Liebowitz _home loans, I think is what it is. Close with Liebowitz. That's CLOSE with WITH, and my last name Liebowitz LIEBOWITZ.com is going to be where you can find all my information. I'm sure we'll link to it.
Yeah, I'll put it in the
Everything.
notes and the
So, yeah, reach out. I love kind of outside of mortgages. I am a nut for doing crazy stuff, running, whatever, outside. I enjoy it.
You run a lot outside in the cold with no shirt.
Health is a big deal.
Crazy
It's
ideas.
very uncomfortable.
Right.
It's very uncomfortable.
Yeah.
But I think you got to do that. I have 9-year-old twins that I just have the best time with. I've got the most incredible wife in the whole world. She is an amazing, amazing person. And I get to hang out with folks like y'all. I get to hang out with realtors all day and help clients, and it's just the best feeling.
Awesome.
Yeah.
What is your favorite story of 2024?
Of 2024.
Boom, sprung it on you.
I mean, we went to Chicago with the kids in 2024, and that was just, we live in this world where everything's so fast paced, right? We don't really slow down to take inventory of what's going on in our lives. We are fast paced, and when you wake up like we do every morning and we're unemployed or we're making no money, we got to go get it, right? Because if we don't do anything, we sit at the house, we don't get paid.
That's right.
So we took the kids to Chicago, and we did like an architecture tour, and the kids are now, they're asking really intriguing questions, really engaging questions. And as a dad, I love that. My son will ask me questions. I'm like, I don't know. Let's research together. It's kind of fun. Let's do that.
Yeah.
So I think it's just realizing how much I've got to learn about life, realizing how much, how many moments I had to where I got to connect with people on a deeper level. And I think, this year, one of my biggest goals is to ensure that, men our age have a place to talk about life stuff.
Oh, yeah.
Right. And we're going way off topic now.
Mental health.
Mental health it's massive.
The negative issue of 24.
Right. And then it's true. And the guys don't feel like we can talk about it, right? Girls do a really good job most of the time. They've got their group of friends, and then they'll go do bunko or whatever, but like they actually talk about stuff. We as guys don't. We let the world overwhelm us at times.
Just talk about sports or money.
Or nothing.
Or nothing.
Nothing.
Right.
But man, I got a group that we talk about stuff. We talk about real stuff for an hour and a half, 2 hours, once a month. And it is like, it's so fulfilling. It's so fulfilling to know that, golly, I don't have to have everything together, but I can talk to people that are older than me that have different experience in these places. Like true mentors on the mental side of like,
oh, yeah. I wonder, let me ask you this. That reminds me. So if you're a prospective person out there, maybe you want to become a real estate agent. Just keep in mind, you will also become a therapist for potentially half your clients each year. You will have discussions you never thought possible that doesn't seem logical at all, but the people want to ask you about those things and want you to do things that are illogical. But does that happen a lot on the mortgage side?
Sure. Yeah.
Where people have their crazy personal issues and bring them to you to solve along with helping them get approved.
Yeah, I just think a lot of people don't know, and I think a lot of times when we're in any situation that we don't understand, we act a little bit different, right? Like we're talking about money, we're talking about huge investments. So yeah, I mean it happens, but like when you see a buyer sitting across from you at a table and they never thought they were going to buy a house.
Oh man.
And like they're in their mid 40s or whatever age. Just I'm in my mid 40s, so I say mid 40s. And you have a realtor that has done a great job of finding this, and then I get to sit across from them. I help get them into this house, and they're crying these happy freaking crocodile tears because they're like, I never thought in my whole life that I'd be able to own a house, and now I do. Like, that's why I love this job. All the bad stuff, all the tough stuff, all the worry, like that. That's why I do what I do.
Yes.
Love that feeling.
Oh, yeah.
So.
Boom. Alex says, that's a great spot to end the show.
Woo! Happy 2025. If you need a lender, give me a call. Realtor.
Ethan Atkinson.
Where can I find you?
Yeah. Well, you already found me on this channel.
That's true.
But it could be anywhere. That is not the answer.
Edit that one out.
Right. If you're surprised that you watched this video, my name is Ethan Atkinson. Reach out to me. And come to the Athens Real Estate Investor Association meetup next Tuesday, January 28th, 6 o'clock. Oh, it's right at the 575 North Harris Street, Greater Athens Properties office. Not associated with them, but we just have a great meeting spot. Huge room. If you're watching this and you come to the meeting, you will get free beer. See you there.
Bye.
Boom.